What is up, everyone, and welcome back to Explain the Charts. Today is October 7th, 2025, and we are looking at an absolutely monumental day for Bitcoin, as it has just blasted through its previous all-time highs to set a new record. The news is electric, with headlines everywhere confirming Bitcoin has surged past $125,000 and even touched above $126,000. Sources like Bitcoin Magazine and 99 Bitcoins are reporting this is a result of a perfect storm of bullish factors. First, let's talk about the news driving this incredible momentum before we dive deep into the charts. We're seeing a massive influx of institutional capital, with US Bitcoin ETFs posting their second highest inflows since launch. BlackRock's iShares Bitcoin Trust, or IBIT, is a testament to this, as it's reportedly approaching a staggering $100 billion in net assets. This institutional FOMO is real, and it's acting as a major catalyst. On top of that, we have the well-known October effect, a seasonal trend where Bitcoin historically sees strong gains in October, often setting the stage for a powerful fourth quarter. We are also seeing signs of a potential altcoin season, with the Total 3 chart, which tracks all cryptos besides Bitcoin and Ethereum, hitting a new all-time high. This indicates capital is flowing broadly into the crypto space, not just into Bitcoin. This is further supported by a sharp drop in stablecoin dominance, suggesting investors are moving out of cash-like assets and into higher-risk plays. Analysts are also raising their price targets, with some at JP Morgan seeing a theoretical upside to $165,000, while others are calling for $135,000 in the near term. However, some caution is warranted, as traditional market signals are mixed. The dollar index and treasury yields have remained resilient, which could pose a headwind for risk assets like crypto. Now, let's bring up the daily chart and look at how this has played out. If we zoom in on the action from late September, you can see the price was consolidating around the $109,000 to $110,000 level. This zone acted as a strong support base before this massive leg up. The 1st of October kicked off October with a powerful move from around $114,000, and it has been almost straight up since then. This explosive rally broke through the previous all-time high of around $124,466 with significant volume and conviction. The candle on October 5th shows that initial break, with a high of $125,750. Then, on October 6th, we saw follow-through, with price pushing to a new record of $126,296. Looking at the bigger picture on the daily chart again, we can identify our key market structures. The previous all-time high around $124,500 should now theoretically act as our first major support level. This prolonged dip from June to August shook out many weak hands, which often builds a stronger foundation for the next rally. The recovery from the $50,000 lows shows resilience, but the rally truly gained steam once it broke past the $90,000 to $100,000 psychological barrier in late 2024 and early 2025. This historical context is important because it shows us where long-term holders might have their cost basis and where major support could lie in a larger correction. If we see a pullback, we would want to see the price hold above this area to confirm the bullish trend reversal and continuation. Below that, the next significant support zone lies around the $118,000 to $120,000 area, which was the final consolidation range before this breakout. A drop below that level would be a cause for concern for the bulls in the short term. Further down, we have the psychological level of $110,000, which marked the low point at the end of September. On the upside, since we are in price discovery, the first major overhead resistance cluster appears to be in the $135,000 to $140,000 range, a target mentioned by several analysts. Let's switch over to the 15-minute chart to get a closer look at the recent price action during and after the all-time high push on October 5th and 6th. Here we can see the incredible volatility as the price shot up to the $125,750 mark. This was followed by a sharp rejection and then another powerful surge to our current record high above $126,200. Notice the large wicks on some of these 15-minute candles around the peak. This indicates significant two-way price action, with both buyers and sellers fighting for control at these new highs. Since hitting that peak, the price has been in a consolidation phase, trading in a range mostly between $124,500 and $126,000. This type of consolidation is healthy after such an explosive move, as the market digests the gains and establishes a new range. A successful bull flag or pennant formation here would be a very strong continuation signal for traders. Looking at the most recent candles on the 15-minute chart, we see the price has been making a series of lower highs and lower lows in the very short term, indicating some profit taking. The immediate short-term support to watch is the low of this consolidation range, around $124,500, and the daily low around $123,115. A break below this could see a quicker drop to test lower levels we identified on the daily chart. Short-term resistance is, of course, the all-time high area around $126,300. A decisive break above that level with strong volume would signal the next leg up is beginning. Traders looking for an entry might wait for a retest and hold of a key support level or a confirmed breakout above resistance. Attempting to trade within this choppy consolidation can be risky without a clear strategy. So, to quickly recap the key price levels we are watching. On the bullish side, we need to break and hold above the new all-time high of $126,296 to continue our path into price discovery. The next major resistance target cited by many analysts is the $135,000 to $140,000 zone. For our support levels, the first line of defense is the previous all-time high area around $124,500. Below that, we have a stronger support zone from $118,000 to $120,000. And our critical long-term support remains at the psychological and technical level of $110,000. Now for some unbiased predictions. The bullish scenario, which I believe has a high likelihood of around 70%, is that this consolidation resolves to the upside. This would be reinforced by continued strong ETF inflows and a risk-on sentiment in broader markets. Under these conditions, a move to test the $135,000 level in the coming days or weeks is very possible. The sentiment is overwhelmingly bullish, fueled by the narrative of Bitcoin as digital gold and an inflation hedge, which is gaining traction with major institutions. The bearish scenario, with maybe a 30% likelihood, would involve a failure to hold the $124,500 support. This could be triggered by large-scale profit-taking, a strengthening US dollar, or negative regulatory news. If we break below $124,500, a correction towards the $118,000 support level is likely. The key things to watch are daily ETF flow data, the movement of the DXY, and the volume during this consolidation phase. High volume on an upward break is bullish, while high volume on a downward break is bearish. Conversely, any unexpected regulatory crackdowns or a major macroeconomic shock could quickly turn sentiment, so risk management remains paramount. That's all the analysis I have for you today. I hope this breakdown of the news and the charts helps you navigate this exciting market. Please remember that this is not financial advice. Cryptocurrency markets are extremely volatile, and you should always do your own research before making any investment decisions. Thank you for watching Explain the Charts, and I'll see you in the next video.